Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and I have it zoomed in so you can clearly see the lines that I drew last week when we forecasted what would happen for this week in the market. And last Friday was right here on this green candle, and I said that we would go up to fill the gap that was left on this day, which was April 24th. And then I said once the gap was filled, we would most likely reverse and go lower, which is exactly what we did. And 80% of the time, by the way, when a gap fills, the market will reverse and go the other way. And again, like clockwork, that's exactly what happened. So again, Monday we went up, Tuesday we went up, Wednesday we went up, came back down on Thursday, closed very close to my target, which is the end of the line. And today, on May 3rd, we closed with a green candle. What does this mean for next week? Well, I'm going to zoom out for you so you can see exactly what these oscillators look like. When you have the price dropping on higher volume, that's a sign that the sellers are in control. You can see that today's volume was just about 50% of yesterday's volume, and that tells us that the sellers are slowing down in their downward pressure. So that's bullish. Now you could also see the CCI down here, which is the Commodity Channel Index, is starting to turn up, and we had a buy signal show up right there. Stochastics didn't quite get oversold, but it's starting to curve back up here. So all is bullish as we see it on the chart. Now, next week, I think we are going to break out of that resistance point right here that I drew from last week. So I'm going to erase that, and I'm going to condense the price axis here a little bit so we get a little bit more room to the upside. I think that next week we're going to continue with this upward momentum, and I think that the Dow is going to break out over this high right here. So I will still draw that as a resistance point, but again, my forecast is that we will most likely break out of that resistance as the bulls take over the short-term trend. So that's the diamonds. If we look at the Russell 2000, which is a more broad-based index, again, my lines are left on the chart from last week. You could see that my same scenario is that we would move up to test this resistance and pull back. We did that Monday and Tuesday. Wednesday and Thursday, we pulled back right to my target. Again, the end of this line is my target. And then what happened? Bounced off of that 20-period moving average, and we closed with a very strong green candle here, which has virtually no shadows. That tells us that the market closed right on the high. As I condense this here, again, I'm going to forecast that the Russell 2000 will most likely head higher next week. So far, these two markets looking very bullish. As we look at the Qs, ticker symbol QQQ, this more or less represents the tech sector. We did pull back as I expected, but we didn't pull back all the way to the target price right there. Indicators are now shifting higher. So again, for the Nasdaq, I think it's going to follow suit with the rest of the market. I think we're going to break into record territory right here as we move higher. Not just early in the week, but I think we're going to continue higher for the rest of next week. That's the Qs. But look at the spiders, ticker symbol SPY. The S&P 500 said we would most likely move up to test resistance. Look at that. We came within pennies, and then on Wednesday, a bearish engulfing pattern showed up, and it pushed the prices lower right to that 20-period moving average. You see that? We closed lower than my target. The high for Thursday was right on the target number. And today, you see, this is a long shadow underneath that candle. Candle being green, CCI turning higher. Again, I think the spiders are going to break out of that resistance right here. And I think we're going to, again, go into new high territory for the S&P 500. Now, that leaves us with the VIX. VIX is the ticker symbol. It's a volatility index. Said we would go lower. And we started to move lower today, right here. Let me zoom in a little bit further. I think we're going to continue lower and more or less reach the target that I had set for it last week. I think the VIX is showing a pretty strong red candle right there. I'm going to draw my angle just like I did last week. You can see stochastics is just about ready to cross with the sell signal. The CCI has already crossed with the sell signal again for the VIX. If it's bearish, we're expecting the S&P to go up because they're inversely related. So everything on the VIX is pointing in support of what I forecasted for more or less the general market. So that's our weekly market report. If you have an interest in learning more about what we do here at The Market Guys, just go to the Market Guys website. That's real easy. It's just themarketguys.com. And I would encourage you to click on the video tab right there. It will bring you to a library of videos we call Market Shots. I'm going to draw your attention to the video that says Trading the Gap. You'll understand why 80% of the time gaps fill, and you'll also learn why 80% of the time prices reverse after the gap fills. So that should be very helpful for especially the swing traders. And if you'd like to enroll in our monthly Q&A open house session, we have one coming up on May 20th. It's from 8 to 9 p.m. Eastern Time. Just click on that link right there, and it will bring you to the registration page where you could submit your name and email, and we will send you a reminder when the time comes to log in. So that is a very action-packed 1-hour session. I think you'll get a lot from that as well. So you have a great weekend, and we will talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.